a special WION investigation into the debt-laden SpiceJet's financial turbulence and the airline's finances. Take a look.
Stock in focus is SpiceJet. The stock is under pressure.
SpiceJet has now decided to send about 80 of its pilots on leave without pay for
एक लाल स्टॉक वो है रेड में शायद ट्रेड करता
है crisis. So we've been reporting this for the last several months in the need.
A decade of losses, mounting debt, regulatory scrutiny, and amongst all this, SpiceJet announced its biggest profit in a decade in 2024. But is there more to the profit than what meets the eye? To understand the story, let's go back in the history of the airline.
We think that we are well placed to take on the world, to grow profitably.
SpiceJet always seemed to have been stuck in some financial trouble or the other since chairman and managing director Ajay Singh started the airline in 2004. It turned into a financial mess in a decade. Back then, flights were getting cancelled. Passengers were stuck at airports and was on the verge of closure in 2014. To turn it around, Ajay Singh bought out Sun Group's stake in the airline in January 2015, and it seemed like the aviation firm had weathered the storm. But a decade after that, the history of its troubles repeated in 2024. Flights were getting cancelled, leaving passengers in the lurch. From over 17% market share in 2014, the firm's market share fell to a historic low of just 2% in September last year. Back then, global analysts were skeptical. As early as September last year, barely a few days before SpiceJet's 3,000 crore rupees fundraising through Qualified Institutional Placement or QIP, a prominent global research firm, HSBC, slashed its target share price by 58%. Back then, the bank had cited an unsustainable financial model as the main reason. SpiceJet's small market share, capacity expansion, profitability and valuation were the other issues for HSBC.
Many of these institutions which have given money in this QIP, they have not even put in 0.25% in this QIP of overall their bank book. I don't want to give any number to SpiceJet, but I'm saying for the timing they have survived. Let's see how they will shape up in the future.
India's airports have doubled from 2014 to 2024, and they're supposed to double again probably in another 10 years. So that's a lot of airports coming about. So those people have not invested into SpiceJet per se. They've taken up a stand for the Indian aviation industry, which is going to grow.
There were 86 LOTs in the QIP for SpiceJet. The highest, 9.3%, was allotted to Autumn Investment and Infrastructure Limited, promoted by the family of controversial stock market operator Sanjay Dangi. For now, SpiceJet is flying, but with SEBI's wings. SEBI's role is to ensure fair market practices and protect investors. But in this case, SEBI exempted Spice Healthcare, a promoter group entity of SpiceJet, from making a mandatory open offer when acquiring additional stake. To get the exemption, Spice Healthcare sent about 10 emails to SEBI during a 9-month period through to September last year. While SEBI is well within its rights to do so, the move is rather unusual. The regulator allowed SpiceJet's promoters to buy nearly 3 times the usual stake limit. Promoters got 13.75%. Typically, under SEBI regulations, acquiring more than 5% of voting rights requires an open offer.
Now, the self-imposed restriction probably is one of the innovative ideas, which I don't think was there in any of the previous situations which SEBI dealt with.
Experts say SpiceJet needed SEBI's exemption to use the government's emergency credit line guarantee scheme.
Other airlines where promoters have gone down, they have not really got any serious government support, policy support. SpiceJet has been lucky in the sense that it has got a positive policy and regulatory environment. Now the point is, in a pure market economy, you should allow companies which do not operate well, which are inefficient, you should just let them go. So don't come in the way of the market economics.
Questions have been raised on the transaction itself. How did Spice Healthcare invest that kind of money into the airline? Spice Healthcare's balance sheet showed that in 2022 to 23, the firm's revenue plummeted. Incidentally, our investigation also reveals that the address of Spice Healthcare and 25 other companies is the same, B1 Kalindi Colony, New Delhi. And of those 25 companies, Ajay Singh is the director in 13 firms. Overall, SpiceJet's finances reveals a picture of pain. The firm's debt is around 5,000 crore rupees, and its market capitalization is about 5,600 crore rupees, meaning the firm's debt is nearly what its total worth is. The balance sheet numbers tell us a compelling story. Over the last 5 years, SpiceJet's revenues have declined, and the firm has not been profitable during that period.
I've seen the auditor's report. It's if you read the auditor's report, it's a bit of a horror when you read that, because there are accumulated losses, 7,000 plus crores. Current liabilities exceed current assets by 6,000 crore. The EPS is minus 15.
The history of financial problems question the motive behind the airline's repeated rescue. Was it done to save thousands of jobs rather than the company itself? Or was SEBI expecting a turnaround in SpiceJet? If so, history tells us a contrasting story. In the company's 20 years of operations, there are more red flags than green shoots.
Basically a sad chapter for SpiceJet, but much of it self-inflicted. But they need to know that you can't bank on government assistance. Let's not forget that Air India was owned by government. And government reached a point where it said, we can't put in more money and we need to disinvest. So if that kind of a lesson can be learned by private operators, that don't expect government to bail you out. That era has gone.
There was an extraordinary scheme which was there because of the COVID, which companies, including the aviation industry, could avail of. But that called for the promoters to put in the same amount of money that they were getting under the scheme. But there were other concerns because SEBI had takeover protocols and others, which, if interpreted verbally or in verbatim, would not have allowed SpiceJet to do it. What SpiceJet did was that they got their subsidiary, or I would say a company which was owned by Ajay Singh itself, to invest 200 crores in it, and without an open offer.
SEBI's exemption was a game changer for the promoters. But India's former finance secretary said SEBI's exemption left retail investors in the dark.
The public interest perspective, the open offer should have been allowed. Right, that exemption should not have been granted.
For retail investors, the profit headlines promised a turnaround. Media reports sang a happy tune. But where did this profit really come from? Experts say the so-called profit was not from operations. It came from debt restructuring, accounting adjustments, and deferred payments. This is what the former president of the Institute of Chartered Accountants of India, Amarjit Chopra, had to say.
अगर आप इनकी अदर इनकम देखें तो अदर इनकम ने शूट अप किया है और अदर इनकम के ऊपर इन्होंने एक नोट दिया है 13 नंबर नोट है उसमें अगर आप जाएंगे और उस नोट के अंदर उन्होंने ये लिखा है कि इन्होंने कुछ लीज रेंटल ऑब्लिगेशंस जो थी कंपनी की उनको रीस्ट्रक्चर किया है परंतु नोट में वर्ड ये दिया हुआ है विच मे बी एग्रीड एट द टाइम ऑफ द सेटलमेंट मे बी का कोई औचित्य नहीं है वेरी फ्रैंकली एक होता है आर एग्रीड एक होता है मे बी एग्रीड अब मे बी मे अगर एग्री नहीं होंगी तो क्या होगा उस वक्त क्या वो इनकम रिवर्स होगी नहीं होगी क्या होगा और उसके चक्कर में करीबन मेरे ख्याल में 500 करोड़ के करीब का जो प्रॉफिट है वो 9 महीने का बुक्ड है और इस क्वार्टर का भी मेरा ख्याल ह्यूज अमाउंट बुक्ड है उसमें
as compared to the previous year, same Q3 for the previous year, there is a substantial jump. And the note to the financial results which have been declared, it has been mentioned that there is a settlement and waiver which has resulted in gain of 204 crore rupees to the company. So obviously 204 crores is huge as compared to 26 crore profit which has been reflected. So if this waiver and settlement would not have been there, probably the company would not have been in the black. So company still would have been in the red because this has contributed towards this profit of 26 crore which has been finally reflected.
SpiceJet's other big crisis before the QIP in September was its fleet and its historically low market share. The firm's survival looked increasingly difficult. But after the 3,000 crore rupee fundraise, the firm's chairman and MD, Ajay Singh, claimed the airline would bring 25 grounded planes back into service. Many still remain grounded.
जो हमारी एयरलाइन है जिसमें आज हम 27-28 एयरक्राफ्ट की उड़ा रहे हैं उनको तेजी से 100 एयरक्राफ्ट पे अगले 2 वर्षों में ले जाने की हम पूरी कोशिश करेंगे.
The other big trouble was outstanding dues. SpiceJet's employees suffered for about 30 months. Salaries were delayed and provident funds unpaid. But in a statement released in December, SpiceJet said that it had settled all outstanding statutory liabilities.
There are a lot of debts which SpiceJet had on its head. And the most surprising aspect was outstanding statutory debts. Some of the provident fund of the employees was not given, salaries of the employees were not given. TDS, which is a mandatory liability. In fact, there is prosecution if you don't pay tax deductible at source on time. You're supposed to be prosecuted, and having that as outstanding is a very, very serious offense. And obviously, the moment the money came, those liabilities must have been cleared.
In the latest news, SpiceJet faces fresh insolvency claims, adding to a growing list of legal troubles.
Irrespective of the quality of service they were offering, they could not attract passengers except by offering lucrative fares, which meant lower fares. So we had Kingfisher, problem, folded up. Jet Airways, folded up. Air India, being a government airline, survived.
Financial institutions, despite such crutches, if you find the case not financially sustainable, don't lend. And of course, I think we should be wary about the kind of deals which the foreign institutional or portfolio investors strike behind the obvious letter of the day of the agreement.
If you ask me, qualified institutional placement, QIP as it's called, it wasn't a very small amount. It was about 3,000 crores, happened in September last. So I feel that most of the QIP has been sort of a cash burn, if I call it, because we call a cash burn in technical financial language when you are not really putting it to productive use. The money ends there. So I think it's like a quick fix solution. It's like a band-aid solution where immediate wounds of SpiceJet have probably been healed.
So, will the 3,000 crore rupees bailout boost Indian aviation? Will it help SpiceJet achieve a tangible market share? Experts think otherwise. They claim that the only beneficiary appears to be the promoter, Ajay Singh, who has used the funds to clear his company's statutory dues and escape prosecution. The story is not just about SpiceJet, but a system that is broken and helps only those with connections and punishes small investors.
SpiceJet, in an email response to our queries, denied any accounting maneuvers. The firm said the promoter group's stake increased from 29.11% to 33.47% due to a warrant conversion. On grounded flights, the airline said 4 aircraft, including a 737 MAX, have returned to service, with more expected soon. The firm said it has cleared 601 crore rupees in outstanding liabilities, including GST and TDS. SpiceJet aims to consolidate its market position with a strong financial foundation. Well, the full detailed SpiceJet response is available on our website. SEBI was also given a list of questions. They include: number 1, the role of SEBI in granting special exemption, the need for market transparency, the role of SEBI in monitoring promoter benefits, due diligence of QIP investors, regulators' action of distressed companies, and the role of SEBI in preventing jet airways like collapse. Well, SEBI is yet to respond to all these questions.